very interesting that what has been happening in the US, which is this super high concentration, the so-called Magnificent Seven, is now actually also happening in Europe, in the UK, and in different markets. What it means that me as a macroeconomist, I need to be very humble when I try to forecast equity returns, because the macro variables are not playing such a big role. It's mostly the micro foundation of these companies and the strategy of these companies that matter. That's for one. And second, it actually changes a bit the diversification strategies. When people have been buying indices, to be a hedge against some of this variation, now you need to be a bit more tactical with some of the high conviction bets you may have on some sectors, some verticals, some trends that some of these companies are really embracing and that making them so successful when it comes to profit sharing of the full index. Yeah.
Indeed, investors, again, chasing that AI stories. We talk about how you just steer away from the macro. But there is a view in the markets that if we do get further clues that the central bank will be cutting rates soon, perhaps March is the time frame in terms of further signposting, then it could bring more money off the sidelines. What's your view on the monetary policy re-rating that could still be ahead of us versus what's baked in?
Look, I mean, markets have been a bit ahead of themselves when it comes to the pivots by central banks, right? They expect a huge pivot and they expect a very early pivot. And we are actually thinking or seeing that the signs are now for a mid-year pivot and maybe much lower pivot than what markets are expecting. What does it mean? It means substantial volatility ahead when people are going to re-rate. But I also think that what we've seen as gains from the past part of 23 and the early 24 are going to be there by the end of the year. I think it's going to be very seasonal. So we're going to have maybe a correction when basically markets are going to see, risky assets, investors are going to see that pivoting is not going to be so huge because of growth resilience in the US or maybe because of inflation stickiness in Europe. But then I think by the end of the year, we're going to have quite some, good 5 to 10% equity returns. And that's quite good, for a year of normalization in everything else in the economy.